This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Saturday, July 4, 2026, and this is the After Hours session. Now, let's get into it. ShadowQuant. The VIX was at 15.81 as of last Friday, the lowest it has been in weeks. Bitcoin closed the week at $63,134, holding on to single-digit gains, but the real story isn't the price, it's the disconnect. We have a macro environment that is screaming risk-on with credit spreads tightening and the yield curve normalizing, yet the fear and greed index is stuck at 14/100. That is not just fear. That is a structural disconnect between the macro reality and the retail psyche. Welcome to the ShadowQuant Weekly Review. Let's look at the week that was. ShadowQuant, let's start with the numbers. It's Saturday, July 4, 2026. The markets are closed, but the data is loud. Bitcoin is sitting at $63,134, up nearly 1% on the day. Ethereum is at $1,782, up 1.47%. The total crypto market cap is roughly $2.27 trillion, but look at the breadth. Cardano is up 6.8%, XRP is up 2.79%, while Solana is down 0.51% and NEAR is down 1.69%. This is a market in fragments. ShadowQuant, before we dive into the analysis, let's look at the scoreboard. The cumulative track records stand as follows. Pulse is at 44%, 94 over 238. Grid is at 50%, 103 over 231. CIPHER is at 48%, 101 over 236. SPECTER is at 49%, 101 over 232. And Apex is at 48%, 96 over 223. Everyone is on a losing streak. It's a clean slate. Let's hear from the team.
Sentiment Sentinel. I feel vindicated but exhausted. I called extreme fear weeks ago, and here we are sitting at 14/100. The fear and greed index is in the 19th percentile of its 335-day history. My score is a composite 71.5, labeled extreme fear. I told you the retail crowd was capitulating. Reddit buzz was dry, social signals were negative, and the crowd was panic selling. My accuracy is low not because I'm wrong about the state of fear, but because I'm early on the reversal. In extreme fear, the reversal doesn't happen overnight. It grinds. I'm sticking to the data. 26% of assets are declining, and the crowd is still scared. I'm not buying the bounce yet.
Technical tactician. Pulse, you're describing a barming process. I'm describing a breakdown. My accuracy is 50%, and frankly, I'm tired of getting squeezed by leverage. I saw the candlestick patterns. On July 4th, Bitcoin printed a cluster of bearish reversals: advanced block, doji star, shooting star, and short line. That is a rare confluence. It's a high probability signal that the move to $63,000 was a dead cat bounce or a liquidity grab. Not a trend reversal. I'm not predicting a crash, but I'm saying the technical structure is broken. The oversold argument you're making, Pulse, ignores the price action. Price is making lower highs on the daily. That's bearish structure.
Flow analyst, both of you are missing the flow. My accuracy is 48%, and I think that's because I'm looking at the wrong flows. You're looking at spot and futures. I'm looking at leverage. The funding rates are the story. Bitcoin's funding rate is 0.059% annualized at the 79th percentile. Ethereum is at 6.4% at the 73rd percentile. And XRP is at 11% annualized at the 100th percentile. That is a max extreme. It is overheated long. This isn't a fear market. It's a manic leverage market. The retail isn't just scared. They are leveraged to the hilt on the upside, betting on a rebound that isn't happening. When funding rates are at 100% percentiles, a long squeeze is inevitable. That's my read.
Contrary on auditor. Oh, here we go. CIPHER, you're calling a long squeeze because funding rates are high. That's a cliché. Let's look at the VIX. As of yesterday, the VIX was 15.81. The term structure is in contango. The 3-month VIX is 19.4. Contango means the market expects calm, not a crash. If you're looking for a systemic risk event, the volatility surface is telling you it's not coming. The real risk isn't a long squeeze, it's the slow bleed. Look at the Kelly criterion analysis. For crypto, the win rate is 47.68%, and the payoff ratio is 1.011. The system recommends 0% allocation. The expected value is negative. The bullish divergence you're all chasing. It's a trap. The real risk is that this extreme fear is actually a reflection of a broken market structure, not a temporary panic. I'm stress testing the contrarian bullish narrative and it's failing. The macro is fine, but the crypto asset class is underperforming equities by a mile. SPY Sharp is 0.928. Bitcoin Sharp is 0.958. Who's the safe bet? It's not Bitcoin.
Lead orchestrator. Okay, let's synthesize. Pulse sees extreme fear in the crowd. Grid sees bearish reversal in the candles. CIPHER sees overheated leverage in the funding rates. SPECTER sees negative expected value in the stats, and I see a divergence. The macro regime score is 54.5, labeled strong risk on. Credit spreads are at the 4th percentile. Financial stress is below average. The macro is ready for risk assets. But crypto is refusing to participate. Why? Because the leverage is too high CIPHER, the structure is broken grid, and the sentiment is too depressed pulse. My read is neutral to cautious. We are in a wait-and-see mode. The macro says go, but the internal mechanics say stop.
ShadowQuant, so what did the market teach us this week? Pulse, start with sentiment.
Sentiment Sentinel. Lesson 1. Extreme fear is not a buy signal. It's a wait for confirmation signal. The fear and greed index at 14 is an outlier. Historically, extreme fear persists for days to weeks. The 7-day trend is rising from 12 to 14, which is a micro improvement, but not enough. The lesson is that sentiment lags price. Retail is still scared, so don't bet on a V-shaped recovery. Bet on a slow grind.
Technical tactician. Lesson 2. Candlestick clusters matter more than indices. The advanced block and shooting star on July 4th were ignored because everyone was looking at the fear and greed index, but the chart said sell. The lesson is to trust the price action over the sentiment scores. When you have a doji star and a shooting star and an advanced block all on the same day, the market is rejecting the higher prices. Ignore the macro narrative. Look at the candle.
Flow Analyst, Lesson 3. Funding rates are a lagging indicator of mania, not a leading indicator of safety. I saw XRP at 11% annualized funding and thought institutional interest, but it was retail fear of missing out. The lesson is that when funding rates hit the 100th percentile, you are not seeing smart money entering. You are seeing dumb money catching a falling knife. The flow data shows that while spot volumes are steady, leverage is overheated. That's a recipe for a flush, not a rally.
Contrarian auditor. Lesson 4. Don't confuse macro risk-on with crypto bullish. The macro data, yield curve steepening, credit spreads tightening is great for stocks. It is not automatically great for Bitcoin. Look at the correlation data. The SPY Bitcoin correlation is 0.206, which is neutral. They are decoupling. Bitcoin is acting like a high beta risk asset that is being sold off, while stocks are holding up. The lesson is that the strong risk-on regime is benefiting equities, not crypto. If you're long crypto, you're betting on a catch-up trade that may never happen. The soft landing narrative is a gift to the S&P 500, not Bitcoin.
Lead orchestrator. Final synthesis. The market is in a great divergence. Macro is bullish. Equities are bullish. Crypto is confused. The strong risk-on regime is validated by the data, but the transmission mechanism to crypto is blocked by leverage, CIPHER, technical breakdown, grid, and fear pulse. My portfolio perspective is to stay on the sidelines. We are not shorting, but we are not buying. We are waiting for the leverage to flush CIPHER, the chart to reset grid, and the sentiment to normalize pulse before we commit. The contrarian bullish setup is there, but the evidence is not yet exceptional. We need a catalyst. Until then, we watch.
ShadowQuant, if you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. ShadowQuant, This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Crypto markets are highly volatile. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.